presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. We have the Dow right now off 48. Nasdaq's off 12. You get the S&P's off 8.5. Gold's up 410 at 12.91. You get silver up 6 cents at 19.20. Bonds, the 10-year, 30-year, they both refuse to back down. The 10's off 3 ticks, the 30, 6 ticks. And King Dollar, she came back from the dead. She's up 400 ticks. She rejected lower price, came into the October 2013 low, rejected that level. She's going to be going topside. We're at 79.80. You got the euro down 56 at 137. And the yen is flat at 101.70. Folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the banner on the top, on the side. You can hit that banner, bring the exchange up. It takes all of 2 or 3 minutes to get the account open. They put $25,000 of funny money. Once you're up and going and you get to understand how these contracts move and what they're all about, then you can fund that account for as little as $100. Don't forget, Darrell, each and every trading day is trading right on the air, 1 to 2 Eastern Standard Time. Outstanding program. And once you do get the account up, folks, you can come over to our website at TFNN to test drive Darrell's Analyzer. Darrell Martin, what's going on?
What's happening, man?
How you doing?
I'm doing great. Do you see that Canadian dollar move? Kabam!
You know what? I didn't, but I will pull it up right now. Let's see what we have.
Yeah, employment. Boom! I just exploded.
CAD. So let's see what we got here.
Little employment change report, little NFP. Usually we don't get that by itself. It's almost, literally.
Okay.
Like out of the last 12, only one of them has been by itself.
I see. So we went 108 to 109. I got it.
Yeah.
That's a monster. There's no doubt that's a monster. So let me just pull this up. And what you did have here, folks, okay, is the oh yeah, look at that baby. I got it. So yeah, look at that. That did it all. Oh, 8 o'clock in the morning. Right. Okay. And what you do have, the currencies, folks, are on the move in a huge way. I mean, if you want to basically see a number one, a rejection of lower price, and you want to basically turn around and say, okay, listen, when you get a rejection of lower price, you had it on lighter volume, all of the above, and then you actually have, see, on dollar, folks, you had already had the sign of strength. You had a sign of strength come in all the way March 19th. It was wide price spread accelerated volume. You came back to that area with lighter volume, then you spiked the area. The spiking of the area is crucial. The reason being is that it takes everyone out. Bottom line, you can reverse on the other side. And I'd suggest that whether you're trading the Nadex product, whether you're trading the futures market, that is the side that you want to be on. And in fact, as you come over to our website at TFNN, John Logan did a sweet video on the currencies out here today. So you can check them out on the right-hand side. You'll see free video. John puts those videos up each and every trading day by 8 a.m. Eastern Standard Time. Hey, yesterday, I was getting on the plane. Yeah, yesterday. So check this out. I was getting on the plane yesterday morning, folks, okay? And so I was scoping out, some of the different contracts, Darrell, right? And what I found really cool, now I hadn't traded oil yet on the Nadex platform, right?
Okay.
And I realized that, now what happens, folks, is this. You got to understand something. You have the contracts, then you have the time frames inside the contracts, okay? So what ends up happening is that your spread or your premium that you're going to pay has to do with both of them. It has to do with, number one, how much volatility is in the marketplace. Number two, how much time is left. But yesterday, it blew my mind, man, because what happened is that, let's see, was it 07 o'clock? Oh, it was after that, I think.
Were you talking about in the evening? Or
No, it was in the morning, because I was getting on the plane. I'm trying to figure out what time I was getting on the plane. I was on the plane. That was even better. That's right, because I was on the plane. Okay, so here it is right here. I got it right here. So what you had, folks, is this, and this is where it's really cool, understanding these different contracts. There was the contract I was looking at was expiring at 11 o'clock Eastern Standard Time, and this was at 9:30 Eastern Standard Time. So the contract itself, okay, at that particular point was trading about 100.24 to 100.30, okay? And the spread, okay, was really sweet because you could sell it at 100.16, okay? Which, you know, and that's my question to you. I really wasn't aware that the spread was that tight on the oil. Do you know what I mean? And that was pretty cool, man, because oil, folks, okay, moves really quick, man. I mean, you know, if you get oil right, you know, in the volatility, you know, 16 ticks is nothing in oil, right?
Oh, yeah. Well, I mean, you have them like 3, 5, 2. But, yeah, I mean, so you're basically talking about like 16 ticks away from the proximity of the underlying?
And for what I sold it for, which I was really digging, man. Do you know what I'm saying?
There's one right here. I mean, I'm looking at that's, I mean, you know, you said, is it having, I mean, this is a 230.
Okay, here, good. Let's do that. Let me look at this. Okay, go ahead.
This is a 231 at 16 ticks from underlying at $24 risk, which is nothing. I mean, that'd be like $250 if you're doing 10 of them, which is a 25-cent move.
Right. For
a $273 profit. Now, that's a buy side, you know, so I mean, you got to make sure it lines up with your analysis, of course. But, yeah, I mean, it doesn't get much sweeter than that on trading oil. And then you got another one on the other side going there. You got this one's 24 ticks, a little bit different, but
okay,
you know, but it's $17 risk.
Well, this one yesterday. So check this one yesterday, and this is one of the keys, folks.
It's actually a straddle right there.
Oh, yeah, no, big time. And one of the keys, folks, that I think is important when you're trading this product also is this. So we know we do the price, we do the volume, right? But what had happened also, Darrell, is that I was at the top of the box. So I was selling it, okay? So what happened, okay, this is sick. The risk was $92, and the reward could have been like $1,300. You know, it ended up being a flat trade, okay? But the reality is that it was there. Do you know what I'm saying? And at certain points in that, and that's what really blew my mind. I'm saying to myself, man. And it didn't have to move. All the oil had to move, folks, okay? And to me, see, oil is a complex ABC structure on the way down. It already broke the B point, broke it with volume, been testing the last 4 days. And what you had happen at that point is that, yeah, you know, right after that level, the baby did spike down to 99.94. Now, at 98.74, it was $1,300. It's like, oh man. I mean, you know, and it was really intriguing, man. So, needless to say, I'm going to be looking at that oil market just because, and just so you understand, folks, you know, Darrell and I, and we talk about the amount of money that you have to put up. In this case, just one oil contract, folks, you're going to put up $3,100. Okay, well. And the Nadex product, you can put up $100, okay, which is just a mind blower. You know, it really is. Okay? And it's absolutely defined. That defined risk is a huge deal. So
exactly. Yeah. And I mean, you can go in, and I think that's one thing I've noticed too. I actually did an oil trade earlier this week, and I was looking at it. The risk was really low, but it had to move about 15 ticks for me to really, you know, make some cash. Or whatever.
Okay. Yes.
I mean, I'm looking at it, and I'm like, yeah. No problem. You know, it's not like, I mean, it's not like some products 15 ticks is a big deal.
Right.
You know?
No, absolutely.
But other products 15 ticks is nothing.
Right. And what you want to wait for, folks, okay, you're going to wait for, you know, because we're talking intraday trading here. You're going to wait for the swing point test of either highs or lows. That's what you're waiting for. And you know, the bottom line is that at $100 a deal, with that type of upside, you know, it's pretty vibrant, man. I'm gonna really wrap my head around that because I really like the idea. I also like the idea that more than likely the S&P sometimes gets pushed, not necessarily pushed around more than oil, but the oil market, you know, lately likes to move $1.50, $2 every day, folks. Okay, you know, if we take a look at it. Watch this, we bring this up. So what happens in that context is that you could be a bull or a bear, and as long as you're putting the trade on at the right time, meaning on the right contract, which you can use Darrell's analyzer to do that for, your odds go pretty good that you'll at least break even, you know. So, you know, like if I look, so today we've gone from 100, so we've have with a dollar move today. Yesterday you had a dollar move. The day before you had a dollar move. They've been moving a dollar every day. You know, if we go back to last week, you're moving $1.25, $1.35. You know, and that's light compared to if this is an ABC structure down. See, to me, folks, oil wants to go to 96.41, and right now we're 100.58. And what it's done, and this is really a testing. 5 days in a row, this thing is trying to get up above 100.76, and it can't handle it. It gets above it, close below it. Gets above it, close below it. Gets above it. And that really has to do with the downdraft that had been created all the way back to March 5th. That's the way that this is set up. You know,
I'm scrolling back. I'm like, man, you got a magnet price way back there going on.
Yeah, you do. You do, which is really cool. Do you know what I mean? Because it's like, okay, like today. So check this out today, folks. This is amazing. Today, we've only done 87,000 contracts. Well, we're going into 283,000 contracts. We're going into 324,000 contracts. Okay? So this baby, you know, just does not have more buyers at that higher price. So
where's your magnet coming from? What date is that?
CLM4. When I'm looking at this, Darrell, I take that. If you take the first downdraft, what happens is that when I do these, all I do is I put the volume up first, right? Right. I happen to know the first downdraft. The first downdraft that was out there March 5th was pretty wild, meaning we're at a different contract right now. But if you look at that downdraft, the high of that... We dropped
from like 102 down to like, 100 or whatever on
that's
that day?
Right. We dropped from 101.87 to 99.44. And that 101.87 also is lining up with the other side up here, which is trying to do on a continual basis, which is the bottom of the downdraft from the second high. Okay? So those are the two levels that it's trying to get into, and what it hasn't been able to do is even stay above the April 30th one, which lines up with that, which is 101.76. So the 101.76, and you put your crosshairs across, you're going to see is right in the middle of that downdraft, and that's where it's having its big problem. You know? So that, what we had off the highs, when we came off the highs, you came off 104, and we broke with volume on the 30th. So that was the small ABC down. Okay, the B point on that, folks, was 100.48. We did 224,000 contracts. We broke that with 284,000. Now, what it hasn't done the full price projection yet. So this is a complex ABC. That's the way I'm looking at it. And it wants to go hit that lower swing. You know, that's not a huge amount of points, but it's 4 points, and that's, we know, and even the oil contract, that's $4,000. And the Nadex, folks, that's you know, you're at the Four Seasons. Money. Yeah, you're at the Four Seasons for a bit. Yeah. You stay right there, folks. Darrell and I are coming right back. Dow is down 5, Nasdaq's up 2. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. We have the Dow Industrials right now flat. Nasdaq's up 2. S&Ps are off a couple bucks. You get gold up at 250, and something you want to keep your eye on, folks. Okay, and this is there's no doubt this is a sick market. But what you have, each and every day this week, you've had rejections of lower price. Yesterday, you had a rejection of higher price. Bottom line is that this cash S&P of 1897. Wants to get tested. Now, what a higher probability that you are actually going to get that tested is that if we close over this 1872.53 today, we're not there right now, but you close over that. And where I'm going with that is that is the downdraft, which was on the 11th, the week of the April 11th. You close over that area, that sets up a test really, in a huge way too. So. We'll see where this whole baby does shake out. The Russell, of course, basically has taken it downtown. That was the first one that got under its 200-day moving average. Nasdaq's about 40, 50 points away. The S&P, by the way, is like 95 points away. So this is going to be some really good trading on a continual basis here, I suspect, all summer. And, of course, what you just brought up, Darrell, the currencies are going to be where it's at. There's no doubt. There's no doubt.
On oil, I'm still looking over here at oil. Yeah. We had that big, we had a spike there back on the 7th.
Yes.
And then we just spiked right into it early this morning, like before the market even opened.
There you go. Oh, that's sweet. No, that's... Oh,
and we did it without any volume.
Look at that. Yep. That's it.
So there's no volume on that spike.
So watch this, folks.
Because that's the spike you were talking about, right? Spike high and then no volume.
You got it. So watch this. Yep. You get 100.99 on the 7th. You did 8,300 contracts. Well, guess what? And that was at 11 a.m. We came up there this morning, and the first time up there was when Europe opened up, folks. You're at 0400, and you did it with 3300, and guess what? If you didn't get it then, no big deal. And this is where the testing comes in, which is even sicker. We turned around and came right back up when all the U.S. traders wake up at 0600, and you did it with 218 contracts. Listen to this. This is sick. 218.
It's oscillating like right around there. Yep.
Yeah, totally. And so, what you'd hope for, well, today would be a tough one because if we don't get it in the next hour, this is going to be summer trading out here. But you'd want to be all over this Monday morning because what you'd love to see is another test up here. You get another test up here, it'd be beautiful. Because, see, what you have also is that you have the bottom of where the spike is, and that's 99.86. So I'd say, hey, it's already told us that it can't make it higher after the spike. You've tested twice, dramatically lighter volume. You have some volume down at the low, so it's like your probability goes up dramatically that the low wants to get spiked versus the high, and you get that ABC structure that looks like it's an ABC. Well, it is an ABC structure on the way down. It already passed the B with volume. It's just a complex structure right now. Let's go.
So what's your target on that?
CL. The target is the swing point.
Now, I mean, obviously, it may not happen until Sunday, Monday. But,
that's right. The target is the swing point 96.41. Because see, it's a larger one. It hasn't done the full price projection of the smaller one yet, and that's what makes the trade really cool. But the larger one is, the swing point from March, rather, which is 96.41. And what has happened, not that the correlation is direct, but what has happened is that the oil and gas sector, folks, kept testing. So if we go look at the XLE, what you'll see, that kept testing high, kept testing since April 27th. It spiked on Wednesday. Got to 95.26, did 9 million shares, and then guess what? Come down with 10.9. You're going to be inside the range again, so that's saying the XLE wants to go to 91.30. So it's kind of getting put together. We had Victor from New Jersey. He wanted to look at CLNE. This is clean energy. It's up. Looks like it's up 10% today. It's a $9.71 stock. It's trading at it traded at $9.71, up 90 cents. I wouldn't be buying this. That's the bottom line. This is an equity that has come down hard. Let's see if we put this on a monthly. Yeah, you're down off $25. You're trading at $9. You still have, you get a bounce out here today, no doubt. But you're going to see on a weekly, we've come down with 44 million, and you're bouncing out here at 11. Not even close. You stay right there, folks. Darrell and I are coming right back. And don't forget, folks, Darrell has an outstanding show each and every trading day right here at TFNN, 1 to 2 Eastern Standard Time. When you bring that Nadex platform up, come over to TFNN, test drive his analyzer, and it's an outstanding piece of software. Darrell and I are going to come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 28, Nasdaq's off 6.5. You get the S&Ps off 5.5. And if we take a look at, let's just see where we're at right now. This is early in the day, but what I expect you're going to see out here, folks, is you're going to see anemic volume. You get lower price. It's the summer started. That's the bottom line. The winter up north and in the Midwest has been a disaster. Everyone basically wants to be out, and what that's going to set up here inside the marketplace is that you're going to get slightly lower price today, or sideways market with light volume, and guess what? That gives the bears it gives the bulls a shot that these highs of April 4th are going to get tested, and the bottom line is that we'll see whether they can get any juice behind it. You know, thus far they haven't been able to get any juice behind it, but you know, until that test is out there, we'll see how that shakes out. So it's it's going to get interesting here because these high levels have been up there on a consistent basis. The move in the currency, if I've seen when you have markets dislocate, folks. Most of the time, it's fast currency moves that dislocate markets. You know, so we'll see if, in fact, the dollar can get more than 2 days of strength. You know, it had the day of strength yesterday, has one today. You know, we'll see whether that can accelerate up to these 80.77 ASAP, where the euro And the amazing thing, there's no two ways about it. When you look on a fundamental basis, it's like, what was the euro doing up there anyway? But guess what it was? It spiked its high. You know, that euro got up to the 139.93, which got over the high, lasted about all of 5 seconds. And now it's going to try to, well, what has happened is this. The euro has gotten a lower range now. Okay, once you're under 138.11, guess what? It opens up 134. You know, so we'll see if they can hammer that baby down. You know, Draghi's saying that, hey, guess what? You know, yeah, he's going to, you know, basically say, okay, we are going to do stimulus. You know what's amazing? What's amazing about that is that you talk about telegraphing something, right? It was like that was.
Oh, he has been the master of doing that, man. He is. Like, I mean, it's you know, everybody was like knocking Bernanke, but I mean, what's the euro, you know, and what been happening over in Japan and how they've been broadcasting stuff. It's been amazing. Yes. You know, like, I mean, Bernanke almost looks like a Boy Scout compared to these guys.
I agree. No, there's no doubt. And what you've heard a lot, folks, okay, is this. Now this has only just been coming out, meaning that, you know, people are basically saying, well, how are our rates staying so low? Well, folks, if you're in the bond market, if you're an institution and you're in the bond market, it's important to understand, number one, what the rates are, but number two, what is the competition? And when you take a look at the competition, okay, you know, this is where this thing really gets sick. That, you know, the U.S. right now, this is live, we're paying 2.612, okay? And guess what? France is at 1.887. Germany's at 1.451. And if you want to get really bizarre, go over to Greece, who Greece was paying, you know, some astronomical amount, whether it's 14, 13%. This is a 10-year I'm talking about. You know, right. When we were in the crisis, people are lending money to Greece at 5.9. Okay? So if you think rates are going up, okay, what's going to happen with the rest of those countries? They're going to go up dramatically, you know. So if you're a bond portfolio, it's like, okay, if I'm going to go lend money to, you know, France or Greece, France or Germany, and make 1.4 or 1.8, or should I lend it to the U.S. at 2.6? That's, you know, that says quite a bit, man, you know.
Yeah, I mean, it's, now we got Yellen now. She's out there saying, hey, we're going to cut off money flow supply, and yeah, whatever. But so I mean, she was tanking the dollar on what was that, Tuesday, right?
Yeah, and that's what it takes, you know, to basically make lows. And this is if you want to see something here, I'll put this up, folks. U.S. and if you want to just see
strengthening the dollar, I guess. In that progress. Yeah, right. That's what I meant.
If you
taking gold.
Yes, if you want to see what the dollar actually did, not all it did, but it spiked into the October 2013 low. The contract's coming up right now. Come on, baby. Come to daddy. 1 second. So I put this on.
That discipline of waiting on the chart, man.
Yeah.
So tough.
That's weird. Oh, I see what's going on. 1 second. Hold it. It's not going to come up if I put a commodity versus... there we go. Okay, so I got to put a currency up versus a commodity. Okay, so when I put this up, right now we get the 30-year at 136.01. And, oh, I know. What am I doing? Okay, there we go. I'm putting the bond up versus I knew that wasn't looking right. Okay, so here we go. So I put the dollar up now, and what you're going to see is that we had the low that was established in October of 2013 was 79.06. We got to 78.93. So that's what we spiked. We rejected it. And it's like, guess what? You know, the lowest swing point never got tested. The lowest swing point is actually 78.60. So you can't bust it down. They couldn't hold it underneath the October low. It was going into the first sign of strength, big sign of strength we had, which is February of 2013. That low is 78.91. You got to 78.93, saying, hey, guess what, man? You're going to start going topside again. So it's going to be interesting watching this shake out. And the key here is what we're saying, folks, is that depending on what side, I would be trading the dollar long. Every basically pullback, you know, if you're trading, whether in the future market, if you're trading in the Nadex market, that's where you want to be because the rejection was so dramatic. It was absolutely dramatic. And the correlation inside the rejection of the euro was there. If we look at the pound GDB, let me look at this pound for a second. Yeah, the pound come off nice too. Here, 1 second. Yeah, she come down good. She's not in the lower range yet. We're at 168. Actually, this is interesting. We're only 10 ticks above it. 168.32 would be the lower range, and she's been out of that range since April 16th. So we'll see whether we get back inside it, man.
Yeah, just trying to figure out like how. Obviously, it's the timing putting all those pieces together, but I mean, we just got to wait on that right pop and drop. I mean, you got to put the.
That's right, and that will happen. This is not going to be a one-way move. I don't expect it's going to be anyway. As I'm talking, the dollar's going to the moon right now. Oh my God! It was something else just went on. This just spiked up another 70 ticks. Look at this. This is a big move, folks. We're at 470 ticks right now, and what you're gonna. This is amazing, actually. But you know what? When these currencies move, there's evidently they don't want to go into the weekend short the dollar or not covered. And what you do have happen, folks, is this. If you looked at who just came out with numbers, someone just came out with numbers. I was reading it this morning. Large corporation, and what had happened is that they got caught on the wrong side of the dollar, meaning yeah. And that was, they shouldn't be trading the dollar. They should be hedging the thing out, meaning a delta neutral, but they weren't. And when you see moves that even this fast, 473, that can be, large companies basically position themselves over the weekend saying, hold it, man, I am not going to be basically long the euro, short the dollar. They'll basically get delta neutral. And evidently, as they get in delta neutral, it's affecting those currency contracts very quickly, and the same with the euro. The euro was, it's relentless. So the euro just took another leg down too. So that correlation is direct. There's no doubt about it. The euro versus the dollar. And what you do have, just as we're talking, as Darrell and I are talking, that when you get a reversal at this big, folks, for traders, the first 4, 5, 6 days, it's a lot easier trading that because the failure is so dramatic. Because two different things end up happening with a failure. With a failure, you'll have folks that are short the dollar that will not cover right away, and the squeeze is just on. Then you have momentum players that know that, oh, hey, that's a failure. I know I get a leeway for 2 or 3 days. I'm going to pile in there, and all it takes is a little piling in there that the rest of the momentum players. And particularly, when you're talking to currency markets, you're talking about leverage that is absolutely extraordinary, so.
Wow. Did you see this article that just popped out about Apple acquiring Beats?
Oh, what a trip that is. I know.
Yeah.
I know.
So I got Beats on my phone, man. I love Beats.
No, I got, my son gave me one of those Beats, those, like the players, man. They're dynamite. I use it everywhere. There's no doubt. And
the app, they don't just have the phones and all that, too. They have the apps and everything, too. And
yes.
The app is, I hooked it up on my wife's phone.
Okay.
Like, she loves it. My daughter loves it.
Yeah,
because it's unlimited download of music. Like, I mean, you can download all the music you want to, as long as your subscription is active, which is like $10 a month or something.
Okay.
You can download all the music you want. I mean, they got everything.
Oh, that's pretty cool.
It's not just streaming. It's like, I want these songs on my phone. And so, you don't have to be in Wi-Fi coverage or whatever. And so, they'll be in the truck and, we got Bluetooth, so my daughter's like, play this, and it's like boom, 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 boom.
Man.
So it's pretty smart.
I'm so glad you said that, man, because I got an HTC phone, and when I bought that, Beats was right on it, and I've never used it. Okay.
Yeah, that's what it is. It's unlimited. I mean, it's like a $10 subscription, but it's like unlimited download music.
Oh, that's great to know, because what happens...
So it's cheaper than buying a song for $1 and you get tired of it, and
totally.
all that stuff.
Totally, because what also happens is that the way that these Beats players, well, all these players, whether it's a Beats player or the speaker, the Bose, they pick it right up off your phone. So whatever's on your phone, you throw it next to your speaker, and you basically got a whole radio station, on your phone, which is just amazing. There's no doubt.
Yeah, because you combine the players with the headphones, with they built a nice little software empire. Apple was very smart to come in and acquire that quickly. So they paid $3 billion for it, but they obviously have the cash. That's nothing.
No, they don't. There's no doubt. And you're going to see This is what is amazing. This is the first change. And I remember when Microsoft did the first change that they had to start going buying people versus basically pushing Windows out. You know what I'm saying? Years ago. And, Microsoft's been in that mood, for basically 12, 13 years, folks. But this is the first get-go on Apple. There's no doubt. And you're going to see more. I mean, they got to buy it. That's what the bottom line is.
Yeah, they're going to start going after everything now, buying it up.
Yeah.
So
it's not going to help the stock, but it'll help on a longer run because...
Well, it'll bring a lot. I mean, it's a moneymaker.
Oh, no doubt. No doubt.
It's a subscription service. I mean, iTunes and all that, that's great, but you got to buy something every month. I don't remember the last time I bought something on that. Right?
Same here. In fact, they have all our credit cards, but there's no doubt about that, man. And before, think about 3 or 4 years ago, that was normal. You hear a song, oh, what is that? Let me get it. 99 cents, 49. It used to be 49 and went to 99, right?
Yeah, now you're like, whatever. I got my SXM radio. I got this. I got that.
Exactly.
But now it's like if I want music on demand and I want that song, now I can go grab it and I don't have to pay for it.
Right.
Because I'm already paying for the subscription.
Right.
And, I mean, I don't know. She probably has like 5,000 songs on her phone now.
Oh, my God. And Pandora's nothing. Pandora doesn't cost a dime. You can get the subscription that you can pay up for. But the reality is that, you don't need that one. You can get the one for $0.
Yeah, exactly. Well, I just love the ability to download it and save it on my phone. So I'm not, like, dependent upon the connection, the streaming, or anything.
Oh no, I'm gonna wrap my head around that, man. I like the idea. I didn't realize that you could do that.
It's sort of weird when you first start playing with it because you get in there and you have to find like the right buttons because they try to like suggest stuff for you. It's sort of funny. You can go in.
Oh, do they?
I'm on the roof and it's a cloudy day.
Okay.
And I'm with my wife.
Okay.
With no kids around. Literally, like you could say, like it has all these phrases. You mix them up, and they're like, based on your music preferences, this is a playlist we recommend. You hit a button, and it has a playlist. It's funny.
Oh, really?
Yeah, it's pretty cool.
That is amazing.
So and they'll play random songs you've never heard before that like meet with your tempo and your mood and what you like to play.
Yeah,
it's pretty smart.
No,
it's fun to play with.
It's definitely smart because there's a lot of songs that you don't hear that are outstanding songs. There's no doubt about that, man. I mean, that has to be one of the hottest businesses in the world, because I've listened to so many different artists, musicians that are just amazing. You'd hear them like in a small venue and say, oh, man, why didn't they make it when other people made it? You know what I mean? It's like, man, everything's got to be, the stars got to be just right in that business, man.
Yep.
No doubt. So market-wise out here, folks, we're at 10 of 11. Bottom line is that, let me bring the S&P up for a second. You'll see this thing's going to be sideways all day. ESM.
It sort of popped up and down, man. It was a little shaky this morning.
Yeah.
So.
Oh, no, big time. And you'll see the shake and bake. Okay, so when you take a look at this, right? No, seriously, man.
Got a little Talladega Nights going on here.
Yeah, that's right. So you first go down. So watch what this did. We had the downdraft out of yesterday at 3 o'clock in the afternoon. Did 90,000 contracts. Below there was 1865.75. We come down, and you come down with some good juice. You come down with 100,000 contracts. That was at 940. You went and tested that with 72,000 contracts. Now you're coming back again. That's telling you, guess what? We're going to have a flat market. You stay right there. Darrell and I are going to be coming right back, folks. We have the Dow Industrials down 26, NASDAQ off 9, S&P's off 5.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. Don't forget, folks, at TFNN, we have 9 hours of live programming every trading day. You can get all that programming right on your cell phone. In your browser, you put tfnn.mobi. You like to get Tiger TV, just go to tfnn.com on your browser and your phone. Go to the right-hand side to see the box. Hit that box. Has a couple little devices in it. Our servers will know what type of device you're on. Deliver Tiger TV to it. One of our Tigers in the den, Darrell, want us to look at gold. So gold out here, folks, what we had is this. Right now, we are doing 69,000 contracts. What we did do on Wednesday, you went from 13.15 down to 12.86. You did 174,000 contracts. That's going into 172,000, going into 189. The cool thing is that yesterday you got under that level with 118. What gold's going to need, though, let me pull this up. This is not over yet, it looks like. Okay, so if I'm going to put the GLD up for a second because I can get a better gauge on the volume coming right across. Well, so let's see. We got lows established at 33 million. We're going to do about 25, which is good. I suspect this low looks to me like it will hold, the swing low. I suspect, though, the way the dollar's moving, we're going to get that low tested again Monday or Tuesday. That's how it's shaking out. The equities, you got, if we look at Rheingold Resources, that's going to go after its lowest swing point, which totally makes sense, by the way. Rheingold, G-O-L-D, that's the symbol. Rheingold right now is at 76. That's game out there at that 74 level to get tested. What we absolutely still have is divergence inside of that market. Some of these have taken out the December lows. Let's go look at silver. Silver, what the beginning of the week, SIN4, silver was actually giving better indications, more information. And okay, so this is nice. I like what silver's doing. Okay, so that's telling me that gold is still going to be cool, too. Because watch what silver did, folks. When gold come down hard, silver did, too. But it was so far away from the lowest swing point. Silver went from 1977 to 1920 with 44,000 contracts, but the 44 was going into 52. And today we're at 18. Yesterday we did 33. That's what it takes. But just like the dollar, silver's probably going to spike that low again, which is 1868. Because right now you're underneath it. We're at 1911.
So you're going to look at that spike on lower volume for a pop back?
That's correct. That would be the trade. That if you're trading either the futures or the Nadex market, folks, that's the trade. The trade here. So let's dissect it right now. So what you had is this. We had this. Well, first off, silver is at $19.10. It's already into the bar. The bar of the low is 1925. So that sets up that 1865 will get tested next week. I don't see it today because it already would have happened. So what you're going to be
we're looking at pretty flat markets for the rest of the day.
Exactly.
On everything.
Right. So what you're going to be looking for out here on an intraday basis is you're going to be looking for when we came down, that spike, it's going to be hard to take that spike out because on that spike, folks, we had 4,500 contracts. So, see, that's a nice setup, man. So whether you're a bull, if you're...
So it goes right into that and it doesn't take it out, and boom, then we're going to pop back up. We're going to look at the next magnet high to go right towards that.
Exactly, man.
There we go.
Another Four Seasons move. It's a beautiful thing.
Let's do it. Last week. We'll do it again next week.
You stay right there, folks. We get our man Basil Chapman coming up next. Nico Page. Our man Darrell back with you, David White, and myself. Have a great one, folks. Have a safe one. We appreciate you growling and prowling with us. Thanks, Darrell.
Thank you. Good show.
Okay.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.